From Kansas State University, this is Agriculture Today. Eric Atkinson here. Ahead today from Oklahoma State University, Derrell with this week's commentary on the cattle markets. He'll talk about how the surge in feed grain prices is likely to affect the feeder cattle trade moving forward. And Derrell will look at whether cattle herd expansion or contraction is in play going into 2021. Also, K-State's Brian Coffey on futures hedging as a livestock risk management tool. He'll be presenting information on using options for that purpose during a special K-State Risk and Profit session online this Wednesday. And K-State's LaVell Winsor and Robin Reid will tell of an online course on managing farm finances now available to you producers. Plus this week's 4-H segment, all of it here on Agriculture Today.
A social distancing tip.
While the CDC urges you to avoid close contact, like hugging or shaking hands, there are other non-physical ways to say hello. Wave, wink, use sign language, salute, smile, give the peace sign, throw up an air high five, do jazz hands. Remember, stay a minimum of 6 feet or 2 arms length away from others, and stay home if you can. For more info, visit coronavirus.gov.
Let's all do our part, because we're all #alone together. Brought to you by the Ad Council.
Welcome once again. You're listening to Agriculture Today. For our cattle market segment, we turn to a livestock economist from Oklahoma State University. He's with us regularly. Derrell joining us to talk the markets. And as we eventually get to it, Derrell, we'll look at the, as you've called them, dynamics of the cattle herd heading into 2021, what we might see in the way of the inventory. First, this recap of this past week's trade. In effect, you could say it was steady as she goes for the most part, wasn't it?
Yeah, I think that's right. You know, it's early in the year. I think we're trying to get a sense of sort of what the trend is going to be here in this new year. You know, coming out of the holiday period, fed cattle markets trying to get a beat on things, kind of taking their cues. Box beef markets trying to get a sense of sort of what the holiday, movement was and demand picture was, and feeder cattle markets as well. Just really, I think it'll be another week or two before we have much of a sense of whether there's any kind of new direction in this market.
The fed cattle trade was steady, maybe $1 higher here and there. Boxed beef, how did it do last week specifically?
Well, it's kind of steady. I mean, it's bounced around just a little bit, but I would call it stable. And again, I think that's really going to be a key in the next couple of weeks to sort of see where we came out of the holiday period in terms of movement of meat. Will retailers need to restock and put some additional demand back in that market? So that'll be a real key going forward. Certainly the fed cattle market is looking at that as a strong cue, and then, of course, keeping an eye on feed costs and other things.
And you mentioned that the feeder cattle market has its eye firmly affixed on that boom in feed grain prices. That's been remarkable to watch in and of itself, and that is bringing to bear some pressure on the feeder trade, isn't it, Derrell?
It does. Clearly higher feed costs is going to weigh on these feeder cattle, particularly the heavier feeder cattle. And I think we saw that at the end of 2020 as well. We had a stronger rebound in calf prices at the end of the year, and even some strength right at the end of the year in fed cattle. But the heavy feeder cattle market, it participated to a lesser extent in that. And as we go forward, those feed prices, they really affect how feedlots are going to do business. They don't really mean that feedlots are not going to want to feed cattle, but it's going to have some impact on the kind of cattle they want to feed, particularly the size of cattle that they're going to want to feed. And so we'll see those things play out here in the next few weeks and months as we go forward with this, higher feed grain environment that we're working in now.
But there's no question there will be an influence on break-even levels for cattle finishing as we move forward for a while. Is that the case?
Oh, sure. It shows up in terms of the break-even, so profitability at the feedlot level, and of course to the extent that profitability is negatively impacted by the higher feed prices, that ultimately is going to get backed into demand for feeder cattle, given that, there's relatively little feedlots can do about the fed cattle market. So whatever level it's at, then with the feed costs in mind, that will be reflected in these feeder cattle prices.
You've numbers on beef export trade, gives us a sense of where that side of the demand equation is at. What have you?
Well, we just received the latest monthly numbers, and they're 2 months lag, so it was really the numbers for November. We don't quite have the final numbers for 2020, but, in the month of November, we saw beef exports actually jump sharply higher. They've struggled, obviously, through much of 2020, and they were about 13% higher on a year-over-year basis for the volume of beef exports. On the import side, imports were actually down slightly, again, kind of reversing the trend we saw through much of 2020. And so, in my mind, we're seeing this trade picture kind of return to, close to pre-COVID levels in terms of the general patterns. And that's kind of what I would expect going forward with, exports probably having the potential for a little bit more strength going forward, and the imports probably backing away from the sort of spike we saw last year in 2020.
That would be encouraging for 2021 as we roll into this new year as well. Let's take a look at the overall inventory, if we might, though, and this in advance of that USDA report, which will be posted at month's end, the semi-annual cattle inventory count. What do you expect that report to say? Do you have any preconceived notions, Derrell?
I've worked up my numbers in terms of my expectations, and in general, I think we're looking at I'm going to call it a slide, a modest slide in cattle inventories, kind of continuing what happened in 2020. If you look at the cow inventory specifically, which is kind of the primary source of supply long-term in the industry, beef cow numbers peaked in 2019. They were off a little bit in 2020. I look for them to be off again a little bit in 2021 as of January 1 in that estimates. And generally across the board, slightly tighter numbers with the overall inventory, the feeder supply being down a little bit. We're carrying feedlot inventories close to year-ago levels into the new year. But as we go through the year, I think we'll see those numbers tighten up a little bit. We'll really begin to see the impact in terms of feedlot production and beef production show up in 2021 as a result of the tighter numbers that really started in 2019 as we go forward here.
One of the keys, of course, would be the level of replacement heifer retention into the breeding herd. And what would be the indicators that you would watch there that would suggest whether expansion or contraction is occurring?
It's been a little bit of a challenge, and it is, but if you look at the overall level, coming into 2020, so a year ago, we actually had fairly large inventories of beef replacement heifers, which could have suggested that we would not see much liquidation. But as you looked at slaughter numbers through the year, particularly beef cow slaughter, there's kind of mixed bags, and there was so much volatility last year, it made it kind of hard to read those flow data that we get. But the bottom line is I would look for the beef replacement heifer number to be down a little bit on a year-over-year basis. Not that it really suggests a lot of liquidation, but really to a level that would be consistent with pretty stable kind of beef inventories. And that's really kind of what I'm looking for at this point in time going forward. I think we could turn around and go either direction, up or down through 2021 and into 2022. It's going to depend on how things play out here in the next few months.
And on the other side of it, cow culling and cow slaughter numbers, what's your anticipation there specifically?
Pretty similar to, this last year, cow slaughter stayed above year-ago levels, although towards the end of 2020, it was tailing down to year-earlier levels. Again, it wasn't consistent with the idea of a lot of culling at the end of the year that would suggest liquidation. So the idea of stability here would suggest that we've probably achieved a level of net cow culling in the industry that's consistent with fairly stable numbers. And so I would look for that to continue as we go into 2021.
Well, we're hoping that 2021 is less unpredictable than was 2020. But as you look forward, what variables could impact that inventory one way or the other, do you think?
Well, again, I think it's really a to-be-determined kind of a situation. Obviously, we're still trying to get our hands around this COVID-19 situation. I think it's going to take much of the first half of the year in the U.S. to kind of get that in hand. But assuming that we continue to make progress on that and on a global scale, I think as we move towards the second half of the year, we could see substantially brighter prospects potentially, subject to volatility, of course. And if that's the case, then, again, I think we could be in a situation where after 2021, we might actually think about stable to slightly bigger cattle inventories. There's potential for the global market to sort of pick up and continue growing with beef demand in China being strong, continuing strong. So I think there's reasons that this thing could turn fairly optimistic, but probably doesn't happen until late in 2021 and looking forward to beyond 2021.
We used to talk about consistent cattle cycles. Those seem to be a fleeting memory right now, Derrell, with all the variables that do come into play.
Well, that's the cycles, the cyclical tendencies are still there. We see those forces, but of course they get modified by these, sort of external shock events, and obviously we've had a lot of those. And so, we've had some kind of truncated cycles and so on, and that could be the case here, where we have a fairly minimal and fairly brief liquidation from the 2019 peaks, and we could pick up and go a little bit higher. Or, again, if things don't go well and we have more shocks and more challenges, we could continue liquidation. So I think it's sort of a remains to be seen kind of a situation. We just have to monitor it as we go through this year.
All right. And lastly, on the trade this coming week, will we see, for instance, the feeder market continue to react to those lofty feed grain prices?
Well, of course, the futures market has been highly variable. I think there's a lot of factors affecting that in terms of the whole ag complex and the broader economic situation. There's a lot of money sort of moving around through the economy that shows up in the futures market sometimes. In terms of more fundamental situation, I think, again, we're kind of looking for a sense of trend here in January, and that'll continue for another week or two. The other thing that we have to, at this time of the year, we really have to keep an eye on weather conditions and the possibility that we could see weather impacts in this market. And so that'll certainly be something that we watch going forward.
Thanks, as always, for your input, and we'll catch up with you again in a few weeks, Derrell. Appreciate your time right here.
You're very welcome. Anytime.
Livestock economist Derrell Peel, Oklahoma State University, with this week's cattle market segment. And we'll be back with more on this Agriculture Today.
What is radon? Home exposure to radon gas is the leading cause of lung cancer death in the United States for non-smokers. In Kansas, 1 in 4 homes will test at or above the EPA action level. The Surgeon General recommends all homes be tested and fixed if necessary. Visit kansasradonprogram.org for more information. Test, fix, save a life. This message brought to you by the Kansas Radon Program, the Kansas Association of Broadcasters, and this station.
Agriculture Today returns now, and livestock producers, we want to share word on something that may prove quite beneficial to you if you take part in it soon here. Our guest is going to be making a presentation online about livestock hedging tactics for risk management purposes. Brian Coffey is an agricultural economist at Kansas State University. He'll be leading this. This is a topic which rings important to a lot of producers, Brian.
Yeah, Eric, I think that's right. I think risk management is an extremely important topic for livestock producers, and so that's why we spend a lot of time talking about it. This idea of hedging using options on futures contracts is one that we want to take a little while to highlight here. Either maybe it could be something new for people that they could learn about and decide if it fits their risk management strategy, or if someone has already been using it, maybe we can help them sort of beef up their knowledge of the topic.
Well, before we talk more specifically about what you'll cover in this course, talk about its setup, its framework.
Well, what we've got here is over the next few weeks, once a week, we're going to have 2 presenters. So it'll be an hour-and-a-half session, and each person will take half that time. And we've got all kinds of good topics. We've got livestock outlook. We've got land use, land value topics, macro outlook. So a lot of good stuff coming up, and would encourage people to take advantage of that.
This is being billed as a mini risk and profit conference. Is that correct?
That's right. It's very similar to what our department puts on in the fall every year with our risk and profit conference. And so we're offering this since it's a little bit difficult now to get together in person. And some of the online content that we put out last fall was very popular. So trying to get some stuff out there for people out in the ag world to take advantage of. And hopefully this format will be helpful for that.
And your offering on hedging is coming up soon.
Yeah, that's right. So we'll be doing that on January 13th, and I'll do a presentation about hedging with options. And then Glenn Tonzer on the same session will be giving his livestock outlook.
That is this coming Wednesday, by the way. Take note, and we, of course, will talk about how you can be part of this learning opportunity. As you get into the topic here, though, Brian, what are the principles of livestock hedging that you really want to emphasize and that you think producers could gain from?
So I think a place to start there is a true hedging mentality. And so when we talk about hedging, we're talking about hedging using the futures markets, or in this case, options market, which is a derivative of a futures contract. We're talking about using those markets to manage price risk. And the hedging mentality is not that we're trying to guess the market highs or the market lows and make money necessarily in the futures market. A hedging mentality says we would, as a producer, we'd like to have a more predictable income, or if you're buying inputs, a more predictable purchase price, and we'd like to avoid extreme situations that can frankly wipe out a business. So hedging isn't about enhancing income necessarily, it's about a more predictable income and avoiding catastrophic losses.
And are options the vehicle of choice here then?
Well, it is one alternative, and I think that options are one of those things that's a little tough, frankly, to get your head around at first, and that's why we want to spend some time on it. But they are an alternative that's out there that livestock producers need to at least be aware of. So that's one of my goals for this, is to at least make people aware of the mechanics of options and that they're out there, and then it's up to producers to decide if it fits their needs. So we talk a little bit more about futures contracts than options on futures. And so a futures contract is a legally binding agreement that says you will either provide or accept a certain quantity and quality of the underlying ag commodity. So it could be corn or feeder cattle or soybeans or whatever you're trading. An option is linked to one of those specific contracts, so a specific ag commodity in a specific expiration month. And what the option does is it isn't a legally binding obligation, it's a right. So I have the right to put on a futures position should I choose to do so. So a little bit more flexible than an outright futures position.
Now, futures and options, they've been around, and producers may or may not have dabbled in them. Any sense of where producers might be falling short on their hedging tactics or approaches?
It's hard to say because everyone has a different tolerance for risk and everyone has different goals in their operations. You know, operations are of different sizes and those kind of things. I think some people are a little bit intimidated by the idea of going out and trading options on futures. And I think sometimes that as educational personnel, we've done a poor job of explaining the purpose of hedging. So I think, again, hedging isn't to enhance income. It's very possible that you might hedge and then at the end of the day, you end up having a less favorable outcome than if you had not hedged. And so I think sometimes people have an outcome like that. They might get kind of a bad taste in their mouth over a one-off bad experience and then completely abandon hedging. And hedging, again, is more of a long-term mindset that you want the predictability and you want to avoid the extremes.
Isn't that part of it, learning how to comfortably navigate that volatility in the markets via hedging?
Absolutely. That's part of it. And, you know, volatility is not necessarily a bad word. Prices move in response to information, and we like that. We want markets to respond to information that's out there. But sometimes, you know, if prices are moving in a favorable way, then a lot of times we're happy about that. But when they're moving against us, it feels different. And a hedging mindset is we basically want to avoid the volatility in both directions. We want to cut off those extremes. And for some people, when you cut off the favorable volatility, it just hurts a little bit. So you're right. You have to get in that risk management mindset to really be satisfied with hedging.
So this session will hopefully lend toward that very thing. And there are multiple hedging tools at the disposal of the producer. You say you want to make sure that those who participate in this are aware of those.
That's exactly right. And so, like I said, we've talked before, and there's certainly great material on agmanager.info about hedging with futures contracts. Basically, we have two different kinds of options. There's a put option, and what a put option gives is it gives you the right, not the obligation, but the right to establish a short position in a futures contract. So the right to sell a futures contract at a given strike price. And that strike price remains constant. And so basically what you can do is as you move toward the time that you're either going to buy your inputs or sell your outputs, you can decide, is it profitable for me to take that right and establish that short futures position at a certain price? And if it is, you can do that and harvest those gains. The other direction we call a call option, which is the right to take a long position or the right to buy. And I would be using a call option to hedge the purchase of ag inputs. And so, for example, if I were going to purchase feeder cattle, I could buy a feeder cattle call option at a certain price. And then when it came time to actually purchase the physical cattle, I could look at that option, and if it were profitable to exercise that right and take that long position, I could do that and then effectively take those gains from the futures market to offset the purchase price. And so again, the flexibility with the option there is that I don't have to use it unless I want to. Now, that flexibility is not free. It comes at a price, and we call that the option premium. And so the premium is what you have to pay to have a right to hold that option. And back to our comments about risk management mindset, I really, in the material that I'm going to go through, I over and over refer to options as insurance. And I think the fact that we call this an option premium kind of lends to that. It's just like my house insurance. I pay my premium every year, but I don't necessarily become sad if I don't get to use my house insurance, right? If my house didn't catch on fire, I'm not sad about that. I just wanted the insurance to be there. And same thing with options. You pay the premium is gone, but the option's there if you need it.
Well, your hope is to shed light on the alternatives available to livestock producers in managing their risk through options, how folks can take part in it. All of that's included in information on agmanager.info.
That's right. The announcement's up there as far as enrolling, and then you'll have access to the live sessions and the recordings.
Go to agmanager.info. What you're looking for is the lineup for the mini risk and profit sessions, and the first of those sessions will be taking place this coming Wednesday, the 13th of January, over the noon hour. Brian, we are wishing you the very best in sharing this information with livestock producers out there. Thank you for coming over.
Yeah, thanks for the opportunity to talk about this, Eric, and we look forward to the session this week.
Excellent. Brian Coffey with us, agricultural economist here at Kansas State University on this part of Agriculture Today. Now, this break, and we'll return then with more on the K-State Radio Network.
Did you know every Kansas farmer feeds 128 plus people?
Kansas farmers are hard workers, dependable, authentic, and sensitive.
Not only do farmers put food on your table, but they put clothes on your back and fuel in your car.
For more information about Kansas farmers, visit K-State Research and Extension online or stop by your local Extension office. This message has been brought to you by the K-State Animal Sciences Leadership Academy participants.
Agriculture Today is back now. Eric Atkinson with you. And we want to inform you on this segment of today's broadcast about something that's being offered uniquely by the Agricultural Economics Department at Kansas State University. It's an online class to enhance one's farm management skills. It's entitled Finances and the Farm, and it was just rolled out here a few days back. To let us know what's happening with this course now and how you can participate if you're interested, the two instructors conducting it, Robin Reid, farm economist, and LaVell Winsor, farm analyst here at Kansas State University. We'll begin with you, Robin. What is it about and what's its intent?
Well, Eric, this is new in the sense that it is online, but is actually a program that we offered last winter. And we had almost 700 participants go through it in kind of a hybrid format where we broadcasted across the state, and there were 32 physical locations people could go to take this class. And so what it is just focusing on the core principles of farm financial management, but in the sense that we want to make sure what we're teaching is something that managers can directly apply to their own farming operations. So we go through 6 topics in this class: farm record keeping, balance sheet, income statement, cash flow, managing family living expenses, and then goal setting for the operation.
So that's the framework here. LaVell would like you to expand a bit on those 6 lessons that Robin just listed and how the information that you'll be covering will be conveyed online.
Yeah, so as Robin said, we do have the 6 topics, and so we have material that folks can listen to and then related activities that correlate with each one of those topics. So the participants listen to the information. Hopefully we're able to give some tips of how they can apply this, how they might do a little bit better with their own records, and then also maybe what their lenders might be looking for with those types of financial records as well. But ultimately, the goal is that the producers can take this information, make improvements on their own farm, and then use their farm records a little bit better to actually manage their farm and plan.
Now, to point out, this is not on a hard schedule. This is very much a floating opportunity, if you will. Those interested can take these a la carte. They can listen and absorb from them at their leisure. That's how you've structured this, right, Robin?
Absolutely, Eric. So we wanted this to be as convenient as possible for folks that are taking it. So when they enroll, they actually have 6 months to complete the course at their own pace. Now, we've had questions. This isn't an official K-State accredited class, so it's not a huge, intense farm management class. It's about 3.5 hours of short recorded video content and then 3 activities for the participants to do. So we would like to see them complete that, maybe within a few weeks to a month's time, just so they don't kind of forget what they learned in the first few lessons, but they do have 6 months to complete it at their own pace. One thing we really emphasize with this online format is this class can be taken with a husband and wife, or even with a farm manager or other family member of the operation. One thing that we found on our surveys from our program last year is the material was wonderful, but the participants wished that the whole family would have been able to partake in it. So this really gives the opportunity to take it at home with the entire family or operation.
And one of the key features here, it was touched upon, but LaVell, this is structured so that producers can take what they've learned and implement it directly into their operations. There are guidelines within the coursework here that will help that along, you say.
Yes. So for each one of the lessons, or several of the lessons, there are actually activities that correspond to them. For example, the balance sheet. There's a corresponding balance sheet activity. And one thing that we did with this is we made 2 different types of activities. We know Kansas has all kinds of different farmers, and so the farm family can choose which type of activity they want to go through. So one of the activities is focused on a cattle and crop, so more of a commodity-based farm operation. And the other series of activities are CSA farmer market type activities. So You will have access to both of those types if you wanted to go through both activities, but the basic point is that they reinforce the concept and then utilize the type of production, whichever type the farm wants to choose.
There are elements here of setting goals for the operation, of being able to adjust when financial conditions change to avoid difficulties. So you've tried to make this as fluid as possible, Robin.
Yes, and one thing we'd like to say too, this class will fulfill FSA Borrowers Training Financial Credit. So when we did our class last winter, we also were able to offer this certification, but we have two versions of the class. So if those that need that credit with the Farm Service Agency, they can take the class. We will be grading their assignments, and there's a test at the end to get that certification. But we also are offering the class as just education only. And in that sense, you can just go through the class and do those activities and self-grade them.
And the registration fees are adjusted accordingly to what you just said, right?
Yes, so it's only $100 to do the education-only class. For the FSA Borrowers Training, we do need to charge a little more, so that is $300, and that is because we will have to have more hands-on interaction with those people taking the class in grading those assignments and taking the test at the end.
And should note there's bonus content on calculating costs of production, on grain marketing, something on family communication, managing farm stress, a lot of that highly appropriate for the times. So how do individuals take part? What's the registration process here? Where do they go? LaVell?
Yeah, so I think probably the best way for them is to go to agmanager.info, and under the events tab, they can find finances and the farm, and then they can select that, and that will take them to a registration, and they can either choose that education only or the course that is geared towards the FSA borrower's credit.
Very well. Again, this is built around 6 lessons on record keeping, balance sheets, income statements, cash flow, goal setting, and managing family living expenses. You can find out more at agmanager.info, but all of those sessions are online now for you to participate in this overall course. Thanks, Robin, and thanks, LaVell, for being along with us here.
Thank you, Eric.
LaVell Winsor and Robin Reid of K-State Agricultural Economics. The course is entitled Finances and the Farm. Take part in it now by going to agmanager.info and finding out all the details. We'll be back with more. This is Agriculture Today.
Did you eat today? Thank a farmer. A way to get more involved in agriculture is through 4-H and FFA. Through 4-H and FFA, we have been given multiple opportunities to grow as leaders and learn more about agriculture.
You can learn skills related to jobs, public speaking skills, and you get the opportunity to travel around the country and meet new people.
If you want more information about getting more involved in 4-H and FFA, visit them on their websites at kansasffa.org and kansas4h.org.
Welcome back, and thanks for joining us on Agriculture Today. Along with Eric Atkinson, I'm Jeff Wickman. Record keeping and project reporting are an important part of the Kansas 4-H program. In addition to teaching 4-H youth a valuable life skill, Southwest Area Kansas 4-H Youth Development Specialist Amy Solllock says it summarizes their experience for each project and becomes a permanent record of 4-H and non-4-H experience.
Yeah, it's an important life skill to be able to record and track progress throughout the 4-H learning year. And, record keeping isn't necessarily anybody's favorite life skill, but it's a necessary one. And if done right, it can be pretty painless and actually quite astounding to look back on all that you've accomplished.
Well, it's kind of interesting because it is one of those things that is easier to do as you do it and as you're going along. And that's really what you're trying to encourage the youth to do, is to do this throughout the year.
Yeah, we're really focusing an intentional effort to try to get kids and families to record things as you do them, right? It's an accurate account of the work throughout the 4-H program year. But we've kind of seen a trend over the last decade to where they're done in retrospect. And we really want to reverse that and do what we can to get kids to record and make notes along the way as they do them throughout the year.
So they're doing more than just writing down a couple of words. They're actually kind of going into a little bit more detail.
Yeah, we're asking them to keep track of essentially everything they do, whether it's related to a specific project or something, an activity that they do within their club. There's a couple different record-keeping tools that we all have access to online, and we're asking them to not only track activities, but skills learned, knowledge gained, who helped them along the way, and a lot of things in 4-H require some cost along the way, and if you're lucky, you also can make a profit or contract some income. So we're also asking them to keep track of receipts and expenses so that they can look back at the end of the year and say, you know what, I broke even, or I made a little bit, or, I lost a little bit. What could I do to maybe turn that around next year?
I think that really demonstrates the need for keeping up with this at least weekly so that these things are fresh in your mind because, as you say, by the time you get to the end of the year, you've forgotten a lot of the detail.
Absolutely. And it's hard to go back and think about it. And, families have gotten good at finding a system that works for you. So, we have more tools at our disposal than ever before. If you want to make notes on a smart device along the way, if you want to print out one of the new report forms and kind of keep a pencil and paper copy, if you want to write everything down on the calendar that's on a magnet on your fridge, whatever system works for you, whatever system works for your family, so that you don't sit down come, August or September and try to remember what all you've done. Unfortunately, we're really selling ourselves short when we try to go off our memory.
I know I certainly am.
If we can get started at the beginning of the year, and right now, we're kind of halfway through the 4-H year, believe it or not. And with the holiday break and spring break coming up, there's a lot of different activities, project-based learning or maybe community service that will be happening, and it's important to document that now.
You mentioned there is a new form. You did a major overhaul on the old form?
Yeah, I think people kind of had a love-hate relationship with what we referred to as the Kansas Award Portfolio, or more commonly known as the KAP. And we've had it. It's been around for quite some time. It's gone through a couple different revisions over the years. But just like anything, it kind of ran its course. And we heard loud and clear over the last 5 years that we were in need of something a little more relevant and a little more appropriate to what today's youth are trying to record. So we put together a task force of folks across the state. We've piloted it. We're actually in a second year of a pilot online. But the new forms were rolled out on October 1, and we're asking everyone statewide to use these new forms. I think it'll be much more efficient, and I think we'll be able to learn a lot more when everybody's using the same system collectively.
And these are fillable PDFs, or they can print it off and do it old school if they want.
Yes, and we are piloting. We're excited, and hopefully we can launch this statewide for everybody. But there is a select few units across the state that are piloting an online version of these fillable PDF forms. And, with COVID and the pandemic, everything has sort of rapidly moved towards a virtual experience. And having these forms in an online format, I think, is really the direction we're headed. So as soon as we, test that out and work all the kinks out, we're hoping that that's available to everybody across the state.
I know the youth are involved in a number of different project areas. Is there a different PDF for each one, or are they doing one overall of all of their projects?
That's a great question. We are asking that they fill out a project report form for each project that they're active in or that they're enrolled in and participating in. So, if my child enrolls in entomology and clothing and woodworking, they're going to fill out a report form for each one of those to record and document all of the learning and activity that takes place within each one. There is a separate form, which we call the permanent record, and that has been around for decades. And that is the form where you document any leadership within your club, any service activities that you do together, any of those non-project related things. That's where those activities are recorded on.
And one of the real benefits of this is the fact that at the end of the year, they have an opportunity to look back and see how much they did and how much they really learned.
Absolutely. And for the kids that, advance through the program and have those documents at the ready come, high school years or when they're getting ready to apply for college or apply for different jobs post-graduation, we hear over and over testimonies on how valuable these record forms are when they're applying for scholarships or positions or college admissions. We hear from employers all of the time what an advanced skill set 4-H members have in comparison to kids that weren't enrolled in 4-H. And so we know that these are valuable life skills that our kids are learning throughout this process. So again, while it isn't anybody's, favorite thing to do, it really, really is important to learn how to record things, keep them organized, and be able to look back upon them. We've also heard from alumni how fun it is to look back, on their records from when they were a child and kind of reflect and reminisce upon the experiences and the things that they've learned. I still have my records from when I was a child, and that's been a lot of fun to look at.
And all of this information is available on the Kansas 4-H website.
Yes, all of the new record-keeping forms are available online at kansas4h.org. Families and parents, this is a new system, and so we really encourage you to visit with your local extension agent with any questions or clarifications you might have, and we'll be happy to help.
That's Southwest Area Kansas 4-H Youth Development Specialist Amy Solllock. More information on record keeping can be found at local extension offices and online at kansas4h.org. And that'll do it for this edition of Agriculture Today. Along with Eric Atkinson, I'm Jeff Wickman. This is the K-State Radio Network.